The failure of Silicon Valley Bank, the topic on Capitol Hill today, as key regulators testified before the Senate Banking Committee. Among the revelations that SVB was flagged multiple times since 2021 for issues regarding its management and risk-taking. It raises the issue of who knew what and when, and why more wasn't done to rein in some of the bank's more questionable practices. With us now, Evercore founder, senior chairman, the former U.S. Deputy Treasury Secretary Roger Altman. Mr. Altman, it's good to see you. Welcome. Thank you for being here.
Hey, Scott. How are you?
Who holds the blame? Who holds the blame here, do you think?
Well, I saw your poll question, and my answer would be all of the above. Obviously, a supervisory failure. I think that's screamingly clear. I'm not sure what the board of directors or the senior management of Silicon Valley Bank were thinking, but they didn't do their job. And if you step way back, this banking crisis, and hopefully we're turning a page on it now, was avoidable. Why was it avoidable? Because if the Fed had not originally misjudged inflation to the degree that it did, then it would not have boxed itself in and been forced to engineer the most rapid tightening in decades. And interest rates, therefore, wouldn't have risen as rapidly, and the duration mismatch, which was the downfall of Silicon Valley Bank and some others in that system, wouldn't have happened to the same degree, if at all. So,
sure,
this is unfortunate because it didn't have to happen. Having said that, I mean, nothing like 2008, nothing at all.
Right. I mean, it's easy to say, okay, bank management. They mismanaged their risk. The Fed was late to the game. They waited too long, then raised too fast, and it caused many of these issues to happen. Unless you look at the timeline of how things transpired, the flags that were raised, the sirens that actually started to go off, Fed Vice Chair Barr today revealed the bank was rated a 3 by regulators, indicating it was not well managed. Those were his words. Also deemed to be deficient, quote unquote, at the holding company level, also indicating that it was not well managed, again his words. So what responsibility then was it to the regulators, the Fed? Where was Treasury? Where was the Fed? Where were others when it seemed for more than a year that there were simmering issues at this bank and nobody did anything until it was too late?
Well, let's parse that question. First of all, the Treasury is not directly a regulator, and the Treasury does not have any supervisory responsibility relative to financial institutions. Secondly, this episode has revealed that at least part of the 2018 rollback in Dodd-Frank was a mistake, because the idea after that rollback that you had to have 250 billion of assets or more to be subject to the most conservative ratios on capital, liquidity, leverage, and the most frequent stress tests was, in retrospect, a bad idea, because Silicon Valley Bank, as we can all see, was systemically important. Otherwise, the United States government wouldn't have moved mountains to rescue it, at least in terms of the depositors and so forth. And yet it wasn't subject to the right types of controls. So this is just a very broad failure. And I know, because they've said so, that the Fed, and the San Francisco Fed in particular, is going to do a top-to-bottom review of how this happened and how do we be sure it doesn't happen again. But there's a lot of blame here.
I mean, it sounds like the San Francisco Fed is going to be doing a review of itself, I mean, in some respects, because there are, some who would say they're the ones who were especially asleep at the wheel. It was their region. And I know that it's fashionable now to suggest that the rollback in regulations from the Trump administration are at least high up in the conversation of where the blame should lie. But maybe it's not the regulations themselves.
Maybe not all of that rollback. a part of it.
Sure, but maybe it's more the response than the regulation themselves. I mean, again, the flags were raised, the rollback had already taken place, and yet nothing was done.
Yes, but ask yourself if that bank, at its size that we saw just before it failed, shouldn't have been subject to the most frequent stress tests. Of course, it should have been, or the tightest ratios in terms of the measures I mentioned a minute ago. Of course, it should have been. So, there has to be, I think, a big review of the deposit insurance system, which I think has been revealed as out of date, and a full review of Dodd-Frank, which clearly needs another revision.